updates. So today it is going to be Mia, myself, and Cassandra. Thank you so much for coming over. She is one of our resident experts in loan officer support. So today we're going to be going over the zero down program, correct?
Yes, zero down. Big topic.
Awesome. Yes. So just a few housekeeping things to touch on. If you have a question, there's a couple different ways to do it. You can raise your hand and ask live, or you can go into the Q&A and ask your question there. Cassandra has been gracious enough to just say, hey, if you got a question, shoot it out there. We don't have to wait till the end. And also make sure if this is something that you believe your clients can really utilize, we have creatives. Our marketing team is ready and willing to get that co-marketing creative designed and sent over to you, a digital copy for you to start using immediately. So don't forget, get with your NEXA loan officer. They will log into marketing with you. All you have to do is send them your picture and your information, and they will make beautiful things happen.
Yes,
So
that's what we
with that,
do.
yes, with that being said, Cassandra, I'm going to give the floor to you.
Yes, thank you so much, Karen. I really appreciate that. I'm so excited to have, I see we have a large amount of people here.
Yeah.
So got to get this word out. So I'm excited about the opportunity to just share this wonderful program with a lot of our realtor partners, as well as our fellow Nexans. So with this zero down program that one of our lenders are allowing, it's amazing because a lot of times we hear down payment assistance, typically it's primarily for FHA loans. So to know that we have a zero down program that will work similar to an FHA on a conventional is amazing. So with this program being able to offer a minimum down payment of 3% up to $15,000. So that could be a decent purchase price to a home buyer who wants to go conventional, not necessarily want to go FHA. And they can get up to $15,000. So, I mean, that could put you anywhere to like a purchase price of 400, 500,000, just whatever that 3% looks like, you can get up to 15,000. And another benefit, so it's like, typically for someone who was conventional, they typically have their own money that they could put for down payment. So why not put that money to the side, whether you could use it for home repairs or just for savings and not leverage that money for the purpose of buying a home? Use this down payment assistance that is zero interest, does not accrue any interest, no payment is required, and it doesn't have to be paid back until you decide to either sell your property or you decide to refinance. So for a lot of people who may be familiar with the Florida Hometown Heroes, it's kind of similar to that, to where, Florida Housing was giving up to 35,000 with the same concept. So the fact that we have something similar, that this particular lender, like this is lender specific, right? So it's not, dedicated to a certain county, town, anything like that. And another thing that is awesome about this, Karen, is that it doesn't, like, you don't have to be a first-time home buyer, and they don't
Oh,
have any income restrictions. So that is also huge in terms of leveraging down payment assistance where you don't have to be a first-time home buyer.
I love that. I love that.
Yes.
And just so everybody knows, because I know normally a question at this point would be, well, who's the lender? What you need to understand is that NEXA and the size and the amount of loan officers that we have under our umbrella, that allows us to have access to so much more than what most mortgage brokers have. I mean, it's like, I like it, but
Right.
so as far as lenders go, that's kind of like our little hidden gem. Our loan officers know what's available to us. So if anybody has a question, something like that, just get with your next loan officer.
Exactly, exactly.
But,
Can't give away all our secret sauce.
we all have our secret sauce, and Nexa just our secret sauce is just a little better That's all. I'm not gloating or anything.
Right, right. I see one person asked the question, is the 15,000 reduced over time? So, great question. It is not forgivable. Typically, forgivable down payment assistance are generally reduced over time. This is not forgivable. It's simply a silent second lien that does not require a payment. So if they decide to refinance their house in 5 years, 2 years, 3 years, that lien will have to be paid off. So it will be the same loan amount. So if 3% was equal to 10,500, when they decide to sell or refinance, that same 10,500 would be that amount. And that's what would be required to be paid at the time of sale or during the refinance.
Wonderful. And now so I'm a realtor. I'm talking with my borrower.
Mhm,
I'm talking with somebody who is looking to purchase a home.
mhm,
What are going to be the questions that I ask my borrower to say, wait a minute, I heard about this program with
mhm.
NEXA Mortgage. Let me contact somebody to get you know, the skinny. What is going to be those questions that they ask their borrower?
Well, I mean, primarily the credit score, right? Like we want to ask the consumer, what is your credit score? Because these do have credit score requirements.
Okay.
Minimum credit score is at least 620. And then so there's like two different parts to it. It's there's a home possible and a home one. Our home possible requires a minimum 620, and then the home one requires a minimum 700 FICO. So,
Okay. And
yep.
now what are
And
the differences between those two?
so one is going to be a Fannie Mae and a Freddie Mac. One will require, so the Fannie Mae will have a first-time home buyer requirement and income restrictions, whereas the Freddie Mac, where you probably need like the 700 credit score, does not have, like you don't have the first-time home buyer requirement, and then you don't have that income restriction. So typically, the higher credit score gets a little bit more advantageous offer available compared to with the 620. And then another thing too, another one of the parameters that we have to consider is that it's not eligible. Manufactured homes are not eligible. So it's only for single family homes, PUDs, or condos where this program could be leveraged. And I think really that's going to be the main parameters that we just want to kind of be mindful of.
Right?
There is another like if we have a consumer who kind of falls under the very low income requirement, that Freddie Mac will actually give an extra $2,500 as a grant, right? So that consumer will get a grant of $2,500. And then the difference will be used for the down payment. So let's say if your down payment is $5,000, then $2,500 from that grant that is completely forgiven, that would go
Uh-huh.
towards your down payment. And then the other 2,500 will be taken care of with that down payment. So that would be put as a second lien. So you'll have one portion that would be forgiven and the other portion that would be treated as a second lien.
Wow. Okay. All right. So now with that being said, with all the different um things that need to be taken into consideration, what is the
Mhm.
time frame that we're looking at? Is this like a normal 30 to 45 days or
No, so the beauty with this, with our particular lender that is offering this program, is your typical turnaround time. So we could probably get this done in anywhere between 20 to 30 days. This
oh,
particular lender is pretty speedy with their whole process. So it's not like, with most bond programs, they have to go through a different underwriting system or, underwriting team to review that bond program or down payment program. It's not like that. So the turn time is going to be pretty much um, normal as a normal transaction.
gotcha. Gotcha. And we do have another question out here. Somebody asked, what is the minimum DTI?
So minimum there no maybe maximum DTI we want to kind of be around the 50%
Okay.
because this is a conventional product. Conventional does have their DTI requirements, so we do have to adhere to that.
Gotcha. And let's see here. Oh, Anthony Rainey's being a comedian here. And do we have a product matrix? We can make up a product matrix. Really the best way to do this is to, again, contact your next loan officer, or
Mhm,
even if you didn't want to do that, log into loan officer support.
mhm,
This platform is incredible. You can talk to someone just like we're talking right now,
mhm,
okay? And have the conversation. If your borrower is a little like just trying to wrap their head around it, or your buyer, I should say, have them come with you.
mhm,
Log into Zoom, have the discussion, get that, get through that trust barrier. And the best way for them to do that is know that they have an advocate, which is going to be you, the realtor, okay, and a professional, which is Cassandra. All of a sudden, there's that team element. And
mhm.
now our buyers are thinking, okay, so maybe I can like let the reins go and let you guys actually do your job.
And that's one thing I will say that I love about NEXA is that loanofficersupport.com platform, right? Where it's not just accessible only to our Nexans, our fellow Nexans. It's open to loan officers with another broker, or for realtors who want to come in, ask a question. Like, anybody is welcome to come in and just like, hey, what kind of down payment assistance programs do you have? Or, can I have a one-on-one conversation with you, my client, and myself? Like, that's what that platform is there. We have amazing coaches who are more than happy to help. So if you're referring, fellow Nexan is not available, we're always accessible.
Right. Absolutely. And I mean, now they've expanded their hours, so they're open 6 a.m. to 6 p.m.
Yep.
PST, or Arizona time, NEXA time,
Yep.
I should say. um,
As Mike Cordes would say, next the time.
yes,
Next the
NEXA time.
time.
NEXA time is the only time.
Exactly.
uh, but yeah, and that's the information is just invaluable. So don't be afraid to do that.
Exactly. And do we put the link in there just in case if any of the realtors want to know what that website is, so that way if they want to leverage that platform to join in?
You know what? At the minute you said that, I saw Mia's wheels turning.
You saw that, right?
I don't even have to ask. Mia's already like, I'm on it. That's why I love her so much. She just takes care of stuff.
Right.
Yes, we will definitely put that in there. I'm sure Mia's already all over it. But Anthony Rainey, you had a question. So the minimum credit score is not 700. It's six.
It's
Yeah.
620. So there's two parts. So there's one that has a 620 requirement, and then another that has a 700.
Mhm. Does that answer your question, Anthony? Let's see here in a product matrix. Yeah, we already answered that. Income restrictions. Oh, so with the Fannie Mae income restrictions, what percentage of median income? So
Typically, 80%, if I'm not mistaken, 80% medium income. And then the ones that fall below the 50% kind of falls within that very low income restriction area, where they get
okay,
that extra $2,500 of grant money.
okay.
Hmm.
Maggie, does that answer your question? Just to let us know. 1099s.
What about it?
Is that welcome into this program?
Well, so 1099 is just no different than like a self-employed. As long as we can calculate the income the traditional way, where if you're 1099, we have to look at the tax returns. It's not like we just look at the 1099 income. That's a totally different product. If we look at the 1099 income and not the tax return. So yes, and self-employed, 1099, any income received that can be calculated the traditional way is definitely welcome.
Okay, perfect. So Leo, hope that answered your question. Let us know. If they qualify for the grant, will they be able to get the grant only? Or will they have to also get the unforgivable amount with it?
So the unforgivable assistance, it's only for borrowers who fall within that very low income bracket. So if they fall within that very low income AMI limit, then that's where they're eligible for that $2,500 grant that is forgiven. But if we have someone that is, within that 80%, I think it's like 51 to 80% AMI limit, then it's just the standard up to 15,000 for that down payment assistance. And then another
15.
thing too that is pretty good that a lot of our down payment assistance programs don't allow is that this one allows for a temporary rate buy down. So you can use a rate buy down for this program, which a lot of down payment assistance it's the rate is the rate. There's no
Yeah,
flexibility. So that's another huge advantage to utilizing this product for your buyers.
right. That's cool. That is
Yep.
definitely, um,
Um, and then another thing too is the loan limit, right? So there's the maximum loan limit is going to basically be just your conforming county loan limit. If you're not familiar with what that is, reach out to your NEXA loan officer. They can let you know because every county has a different loan limit. So
mhm.
we could be anywhere from like 700,000. As long as if it's within your county limit, that's pretty much the max that's going to be allowed.
Okay, wonderful. And now isn't there a website too, Cassandra, to find out your county loan limit?
Yes, I know it's on the like if they Google FHA county loan limit or Fannie Mae county loan limit, then it will identify. They can input the county and it will let them know what the max loan limit is to be in within that conforming range.
Wonderful. All right. And let's see here. Oh, so Shawana asked, is this for approved counties or all of Florida?
Well, this is nationwide, so it doesn't even have to be for Florida specific. It's for any if you're from the East Coast to the West Coast, like it's available everywhere.
Yes, this is a national program. And we
Hmm.
try to keep all the programs that are nationally recognized in
Hmm.
this because we understand that so many of our realtor partners, with us being in 48 states, that you guys are
Hmm.
logging in from all over the place. So most of the discussions that we have here are nationwide. But yes, to just confirm that, this is definitely one of our lenders that is all over the place.
Yes, definitely.
Let's see here. Angela had a question. I'm sorry I didn't hear the 15K part. Can you please provide me a quick review? What
So
about the
the
15K?
So I think maybe she's probably asking just like what does the 15,000 cover?
Yeah,
So the down payment assistance is up to so it's 3% of the purchase price up to $15,000. So if you have a client who is purchasing a home 700,000, right? And obviously that 3% is greater than the 15,000, then they will get the 15,000 and then the difference the buyer would have to cover. So
right.
it still helps because then that's additional money that they can hold on to instead of putting all of that in one basket.
Yeah, I mean, let's face it. Who buys a house and says, okay, I love it just the way it is?
Right,
I don't think
exactly.
anybody in history has ever done that. It's always like, well, let's paint this room or let's upgrade this, those kind of things. So why not use your money for those wants and
Hmm.
use this money for the have tos? This is key. And I mean, $15,000. If you're
It's
good with
it's
your
a
money,
lot.
that can go a long way.
Exactly. And and it's I had a client that last year I did their loan conventional and he was adamant, nope, I want to do 30% down. I'm like, you don't have to. No, I want to do it. And I'm like, just go with the minimum because you never know what's gonna happen. Life's right. Like we can't control what happens.
For
But
sure.
obviously, all I can do is just give my advice and he's put his 30% down, that what he wanted. And then lo and behold, 6 months later, he lost his job. Now he's laid off. And now he's like, hey, can I get a HELOC that doesn't require income appraisal? I'm like,
Oh,
let me see what I can do, what I have available. But it's like,
right.
if we can just educate our clients and so that they listen, all we can do is just be an educational resource, right? And hope that our clients listen. Because at the end of the day, if they can hold on to their money and not use it and just kind of put it as a nest egg, because when emergencies happen, at least it's not tied into your house that you have to worry about how can I access that $40,000 that I put down that I was so hell bent on putting down just
Right.
because, right?
I know, like people want to give their money away. No, keep it.
Keep
Keep
it,
it.
please.
Keep it like a dirty little secret. If you need the excitement part of it, do that. But keep your
Exactly.
money. Other people's money. It was not a best um one of those big time movies for nothing.
Right, right.
And let's see here. Is okay, Shmana, I think we answered that. Is it approved for certain counties? This is not county specific.
Mhm.
And
And I'm not sure if I mentioned this in the beginning too, that you don't like part because I said there was two parts. You have the home one and home possible. One of
mhm,
the home one product does not require you to be a first time home buyer. And you can still get that, down payment assistance. So again, this is huge for clients who want to go conventional, not and maybe just a move up, move down, not necessarily in that first time home buyer category. They can still get assistance. Like this is huge.
yeah.
And
Now,
especially for people who currently have an FHA loan, right? Because I deal with this a
right.
lot where, realtors have a client who currently owns an FHA, has a home under FHA. They don't want to refinance because they have that very low interest rate that they don't want to get
Mhm.
rid of, but they want to buy another hot property. What better way
Yeah.
to leverage this conventional and get down payment assistance? This is amazing.
Yeah. Now that was going to be my next question. So this is eligible for investment.
Well, not necessarily investment, right? So
Okay.
if
That's
we
why I
have a
said that
homeowner who
cautiously.
right, so if we have a homeowner who currently owns a home, but they want to either downsize or upsize, and they're going to plan on renting that home out, so they can keep that property, rent a home out, and then move into that next property as their primary residence and still
Oh,
get that down payment assistance. Yep,
very, very cool. Okay. Because I mean, there is a big difference. But the way you said
absolutely.
it was perfect because
Hmm.
why not keep that home if you're only paying 2%, 3% on it,
Exactly. Yep,
and
and
you
you can
go
collect
ahead.
rent. Hmm.
Yeah.
Because I mean that like before this product rolled out, like that was always a struggle for clients who didn't want to, refinance into a conventional just so they can do a minimum down payment, or they just didn't have that down payment available. And the tip, like I said before, typically down payment assistance was only available to FHA borrowers where we have
Right.
those programs where first time home buyer requirements is not allowed, right? Or it's not a requirement. So the
Yeah.
fact that, because you can't have two FHA properties or loans, I should say, if it's within 100-mile radius. So the fact that you can now, get another property and get down payment assistance, it's
Yeah,
it's the
that's
best of
huge.
both worlds for your client.
Right? I love that. Well, they have it. Okay, so we answered that. We a lot of questions today. I love
I love
this.
it. Yes. Questions make
Now,
me
if you
happy.
guys are loan officers, next to loan officers, this is our secret. We're not going to tell Dan that we're answering them anyways. I know
Yeah,
this is
because
going on Facebook across the country, but our secret.
don't tell them we said that, okay? Uh-huh.
All right. So Maggie asked a question. What about, well, mortgage insurance? That's going to be something that's discussed with the loan officer as they're structuring the loan, Maggie.
Mhm.
Um, so that we're just going to say is answered.
So is she
Available.
asking, is mortgage insurance required? Was that the question?
Yeah, it looks like that was the question.
Yeah, so mortgage insurance would be required because the only way to avoid mortgage insurance on a conventional loan is if you were to put 20% down at minimum. So um I know there are some like community assistance what they call them, like community redevelopment programs or something like that, where you
Yeah,
can get down payment and there's no MI. So unfortunately, this is not like that. But you never know. I mean, this particular lender may come out with a program similar to it, but for now, no, this does have MI included.
right. And Angela, I think we already answered your question as far as an investment goes. You know, there's always that way to flip the script, though. Just
Hmm.
like, Cassandra was saying, that first home could become that investment property.
Yep.
And you're going to use this one that you're going into as your primary.
Yep.
So that's definitely a discussion that the realtors can have. You know, let's face it, real estate is always going to be generational wealth. Okay. The appreciation is still happening on these homes across the country, some greater than others, but that's typical. So, but it's still appreciating. So
Exactly.
why not go with the sound bet of keeping that property and purchasing another 15,000 down,
Yep.
rent out that first property. That was put so perfectly.
Yep. So whether if it's a move up or move down, that option is available for you.
Absolutely. Now, are there reserves?
I don't recall seeing that as a requirement. Because I don't know that answer, I would defer to just having your get with your NEXA loan officer. And if it's any of my realtors that are on this call, I will research
Yeah.
and I will find out. So I'm not 100% certain if reserves are required.
All right. Perfect. And let's see here. Income limit is only for the 620 credit program. Let's see. Is there an income limit for the 2,500 grant program? Or is the income limit only for the 620 credit program?
Is the income limit?
So, in other words, is there an income limit to receive the $2,500 grant?
Okay, no. Okay. So the $2,500 incentive is only for borrowers whose AMI is 50% or lower. So if you know how to look up your AMI calculator, there's online there's an AMI calculator. So if you
Mhm.
pop in the address, it'll let you know like 50, 80, and like it has different ranges. So if your borrower or your client falls within that AMI limit, then that
Mhm.
would quantify them as to being eligible for that 2,500. Your loan officer, once they take the application and look at it with your client, they will be able to say, okay, yep, you are eligible in this AMI category, which would allow you to receive that $2,500 grant.
I see. Okay. I hope that answers your question. Anyone else have questions? These have been great questions. I
Yeah,
am so
great
excited.
question.
I am so excited to see that. Let's see here. Taylor has a question. Is the 15K DPA in the form of a grant or will it be added to the Taylor, you must not have been here in the beginning.
She did say sorry, she was late.
But
No worries,
yes,
Taylor.
we'll just recap that super quick for you.
Yes. So that $15,000 is going to be a silent second mortgage. So it goes on as a second lien, does not incur any interest and does not require any payment. So whenever that client decides to refinance or sells their home, then that second lien will be required to be paid off. Now, another thing to note too, Karen, that I don't think I mentioned, is that the funds cannot be used for closing costs. So, unlike there's some programs out there where you can use funds, portion could go towards down payment, some can go towards closing costs. They are very specific that this is only for down payment. So that is something that I failed to mention earlier on, that these funds are only for down payment.
Right. And that's always a great discussion to have. I cannot tell you how many people that I come across
Mhm.
that do not know the difference between closing costs and down
Oh
payments.
my gosh. I think that's another topic in itself that needs to happen because so many
Yeah.
people like, oh, well, I got my closing costs paid by the seller. Why do you need more money from me? Because you still have a down payment. Like,
You still have a down
you
payment.
gotta
Yeah.
have some skin in the game, something, right?
Yes. Yes. And I mean, there's nothing more deflating than when you're talking and they've set their goal to save
hmm
20% for their down payment, not knowing about the closing
Closing
costs.
costs, yeah.
And then you have to have that discussion and they're like, what? You, so
Yeah, and
you
especially when if you're in a market too, because I know there's still some markets where closing costs is, being paid by the seller, but that's not every
yes.
market, but there are certain markets that it's allowing it. So for those buyers who are in that market where they're fortunate enough to get a seller to pay your closing costs and you get down payment assistance, it's truly a win.
Oh,
But for
sure.
those, tap onto family members and like, hey, can I get some money to buy a house?
You'd be surprised how creative some of our buyers can be once they get that news.
Absolutely.
They're like, and just like I was talking about me, I saw the wheels turn. Their wheels start turning, and they're like, okay, who have I lent money to in the past? Because guess what? They're
Exactly.
gonna get a phone call. All right. And the marketing piece, Robert, get with your next loan officer. If not, log into loanofficersupport.com. We can always help you there too. Um, and get that co-marketing piece for you. And let's see here. We have time for one more question because we've already gone over our time. Can you combine 17% plus the 3% DPA and equal it to 20% to avoid MCOM?
That's a
That's
great
creative.
very creative. And I don't see why not. Let me see. Because I don't see where they say what the minimum. So it would depend, and you can get with your loan officer to confirm, but it would
Yes.
depend if the lender has a minimum loan to value required. So if the minimum, or I guess max, if the max is 95%, in order to leverage a down payment assistance, then to answer that would be a no. So get
Okay.
with your loan officer, have them confirm, but that is very creative. I love creative
That
people.
is, Fred is thinking totally outside the box.
Heck
We
yeah. So
love
I
Fred.
definitely, yes, I have to definitely look into that one. I love that.
Yes. Well, with that being said, Cassandra, this was such a great session of Realtors Unplugged. I so appreciate you coming in
Of
and taking the
course.
time just to do this research. This program's pretty brand new.
It is.
So kudos on knowing as much as you do this fast. But you know what? That's what sets NEXA apart from so
There you
many others.
go. Right.
So kudos. Mia, what are we talking about next week? Oh, I think I know.
Yes, we will be having a different theme for next week for our Realtors Unplugged. We will be having a coaching session for our Realtors Unplugged next week. So we have invited one of our lenders, MLB Wholesale Mortgage President, Chris Stanton, will do a coaching session with our realtors next week in regards with the power of the 5 keys. So for our realtors wanted to know about the 5 keys,
Mhm.
be sure to be here next week.
Yes. And since Dan's not here, I have to do it myself. But we look forward to seeing you next time. Same bad time, same bad channel. Thank you, everyone, for coming.
Thank you, everybody.